So here we are. The big day has arrived at last. The Dow has broken 20,000. It's been a bit of a struggle here. It's been about 6 to 8 weeks that the Dow keeps bumping up against 20,000, wondering if we were going to see it get through or not. Today it finally got through. It's broken out. What's really interesting here when we look at the RSI, Dow had gotten really overbought back by the beginning of December. However, by consolidating sideways between 19,700 and 20,000 for the better part of a couple of months, overbought conditions have eased. Meanwhile, the successful test at 50 confirmed the underlying uptrend remained intact. We're now seeing upward momentum building once again. So with Dow's broken 20,000, it's trading near 20,050. This support level here, about 850 suggests probably 20,150 to 200. First resistance area 20,300 based on this channel here would be the next measured resistance area. What's particularly intriguing about the markets today is it's not just all about the Dow, which is a basket of only 30 stocks. We're seeing it in other markets as well. Look at the NASDAQ here. The NASDAQ had actually broken out to a new high a couple of days ago. Why is this significant? This is showing appetite for risk. The NASDAQ is more technology, momentum stocks. This rally really that started back at pretty much right from the beginning of the year. We've only had two down days in the sideways in the NASDAQ since the beginning of 2017. What that's showing is there's definite appetite for risk, definite appetite for growth, and we're seeing that manifest itself with the NASDAQ climbing. Also intriguing here is that we're also getting confirmation from the big S&P 500 big cap index. Look at this. Beautiful breakout from a channel here over 2282 today. There had been a head and shoulders top forming in the RSI. That's been broken, and that's starting to fail as well as we get this uptick in momentum here. Ascending triangle breakout. This first support was in at around 2252. So that tells you your first resistance 2300 round number, followed by about 2312 as a based on a measured move from this recent trading channel. The next thing we're watching for confirmation is the Russell 2000, the really broad index here. It's still in consolidation mode, but look at this. The RSI had been trending lower. It's back above 50 and starting to trend upward again. This may only be a matter of time before we start seeing the resistance here, about 1388, and then the 1400 round number. So this is starting to creep its way higher as well. If this breaks out, we'd get more confirmation. So what are we seeing in terms of the markets is that we're seeing that people are starting to anticipate Donald Trump's policies could lead to U.S. economic growth, accelerating the potential approvals for infrastructure projects, accelerating approvals for pipelines, and trying to get business going, getting business leaders in, telling them to get back not in a year with a report, but within 30 days with ideas of how to get business going in the United States. Seems as though he's trying to run the U.S. like an actual business. So we'll see what comes of that. But anyways, we're also seeing a seasonally favorable period for stocks that runs through about April. So we could see that this new rally does have the potential to have some legs, even if we did get a correction farther out in perhaps towards mid-year, because the only issue we do have is on earnings, that all of these things that are coming in may take a while before they actually hit the bottom line by the time projects get approved and money gets spent. So that's something to note, but for now there is a lot of anticipation getting built into the markets. One other thing that could provide a headwind or a tailwind for stocks, depending on how it goes, is the US dollar. And the US dollar index right now is actually looking quite interesting here. It had run up from 95 before the election, peaked just below 104, but it's been starting to trend lower, and it's back testing the 100 round number today. If this starts to break in a meaningful way, then your first support is 99.70, then around 99.35. The RSI's already gone under 50. This is showing downward momentum, and we're seeing the downward momentum play out here. Why is this significant? Because the US dollar could also have a big impact on U.S. corporate earnings. My one concern, and I think that had been concern of a lot of people and why the markets went sideways in recent months, was the U.S. dollar had exploded upward. That can be a short-term negative on U.S. earnings because it impacts U.S. exports and it impacts the overseas earnings of U.S. multinationals. However, if the U.S. dollar starts to go down, that headwind gets removed and you may even get a tailwind behind it. So that can also, a falling U.S. dollar could also provide support to stocks in their current rally.